and welcome back to our next episode of the Right Mortgage Network's Lending Insights podcast. I'm Victoria Clark, Head of Lending at the network, and I'll be your host for today's discussion. In this episode, we are joined by one of our leading buy-to-let lenders in the network, Kensington Mortgages. With me, we have James Burwood, previously BDM for the lender, but after your recent graduation, James, our new National Account Manager with Kensington. Congratulations again on your new role, and thank you very much for joining me. Welcome.
Thank you. Wow, what an intro. I liked that you opened with how big we are for you in buy-to-let as well. That was awesome. I didn't even have to ask you to do
Well, that's it. It's true. You can't, got to tell the facts that we've got
that.
here for our listeners there. But and then hopefully today we're going to really get to know more of why you're being a great lender for buy to let. But before we get into it, James, how's the new role going?
Yeah, it's going well. It's a difficult one, really. I mean, it's been 6 months now, believe it or not. So I'm trying to work out at what point, how long I can get away with saying I'm still
Not
new to
being
the
new.
role for. Um, but no, so far so good. I've got good people around me internally as well. I work really closely with my marketing team. They're brilliant. And my boss Helen as well. She's been in, heads of national accounts for a long time. So I've got lots of experience around me, which obviously helps. And yeah, just sort of finding my feet really and getting involved in things like this.
No, I love it, and it's obviously been lovely to work with you in the time that we have. But 6 months just flown by, hasn't it? I know what you mean with just not can't be the newbie anymore, can you? Really, got this great experience.
I'm trying to cling on to it.
So we're going to use our time today to get under the hood a little bit at Kensington and get to know some more key points and what is to come this year. So what's going on with Kensington then, please, James?
Yeah, so it's been I don't want to say a consolidation here as such, but we had massive growth last year. We literally doubled sort of our completion lending last year, from 1 billion to 2 billion. So it was absolutely huge. A lot of that, which I'm sure we'll touch on in a minute, was down to the improvements on our limited company buy-tech proposition. So this year, don't get me wrong, the targets went up again, and we are looking to still grow. Not quite to the same extent, admittedly, but there is still looking for growth. But this year it is sort of more focused on price and service. So rather than sort of bringing out lots of new policy, etc. Don't get me wrong, there'll be some bits and bobs along the way, but it really is just about maintaining those correct price points, making sure that we're competitive in the spaces that we want to be competitive in, whilst also maintaining the very high levels of sort of service standards that we've done over the last few years.
And you think the limited buy to let was a big part of that growth then?
Massive, yeah, absolutely huge. We went from being probably, an 85, 90% residential lender that did 10, 15% buy to let. And then if we look at last year, it was over 55% buy to let, and then about 45% residential. Don't quote me on the exacts, but it was around those
No,
sorts
I
of figures.
remember getting told the 50-50 split about last year. So for it to have tipped that as well, it's really exciting.
Yeah, and that was all uplift as well. We were still doing similar numbers on resi, so it was just pure uplift on that side, which yeah, it is just unbelievable, really.
No, that's so exciting. Obviously, great time for you to come in with all of that great growth that's going on there. And do you think as well being owned by Barclays for I think it's the last 3 years now, isn't it? How's that been? Does that affect the day to day at Kensington?
Yeah, that's a really good question, and like you say, it's been sort of 3.5 years, I think now. Yeah, they believe they bought us just after I joined as a BDM. There was rumours circulating then that it was, something to do with me joining that made them want it. I don't know if it's true or
Oh,
not.
I heard that through the grapevine, yeah.
Um, but in terms of like day to day, I guess no, to put it bluntly, they've not really changed too much. We are sort of completely separate entities still. They let us get on with what we're good at, if that makes sense. There's been a couple of areas, i.e., the limited company buy to let, introducing our buy to let prime. I don't think we would have that if it wasn't for Barclays. Um, and even more recently, actually, I think where we really saw the benefit of having the Barclays ownership was probably this year, March time, when obviously everything kicked off pretty much overnight, didn't it? Um,
Mm.
we had lots of lenders not just changing rates, but some lenders were completely pulling out of the market for 24 hours, 48 hours, without much warning. Whereas we were able to stay ever present in the market, which was massive. We had a few really big days. Of course, we did have to amend our rates. but we also still always gave that 48 hours notice to brokers as well. Just sort
That's
of
it,
trying
but
to,
not pulling out. People remember that, don't they, during that time? It was a tricky time for advisors and lenders just completely going. Wasn't the best. So that's just great to still be able to stick around, isn't it?
absolutely, yeah, and that's exactly what we sort of hope comes off the back of it. Really, it's sort of to gain that trust to show that we are serious, and yeah, to just hopefully to bit hopefully it is remembered that we stayed there. We were always an option, and we did have some really big days during that period because there wasn't as many options out there.
No, definitely. And then what do you think's with the future to come then with things at Kensington?
Yeah, again, it's a good question. It's a difficult one to ask, and I probably have to be careful here so I don't get told off internally. But again, I think if we look to the rest of this year, don't get me wrong, there's going to be a few little tweaks. There's lots of conversations going on in the background. We've just recently improved our residential affordability. So there's lots of things going on that we're to just try and make us a more well-rounded lender. To give brokers all the different options and make us a viable one in each space, whether it is buy-to-let or residential. But as I mentioned at the start, I guess the main focus for the rest of this year really is that price and that service. So making sure that from a buy-to-let perspective, we are right up there, especially on limited company, right up there from a sourcing perspective, and those top two or three lenders, showing that we really are playing in that space of the TMWs, the BMs of the world. That's where we see ourselves when it comes to limited company buy to let. And then, of course, from a residential perspective, we almost have two completely separate peer groups now, because like I say, we're playing with those sort of guys in limited company, and of course, we're up against the Precise, the Oldham Moors, perhaps those guys when it comes to that specialist side. So it's just making sure that we are, I guess, maintaining that competitive rate in both spaces simultaneously. And again, as I mentioned earlier, also maintaining those service levels. So I believe we're operating at an average app to offer about 10 days, 10, 11 days at the moment, which is brilliant. And we're looking at all sort of documents within one day. And we're trying to maintain that as far as we can.
No, and service makes such a big difference, doesn't it? There's so much that goes into it for our advisors, and then so just being able to support from service side of things just makes a massive difference to everybody.
Yeah, exactly. And it's just it's one of those, it's stressful enough, right? It's stressful enough for brokers as it is, especially at the moment. So I guess if there's anything that we can do to just take some of that stress away, make it that little bit easier, then why wouldn't we?
No, definitely. And buy-to-let's been a really hot topic as well, especially these last few months with the Renters' Rights Acts coming into play. How has this been from your side of things? Have you seen a difference? Have you got any recommendations for our buy-to-let advisors on that?
Yeah, it's a really interesting one and a good question. And to be honest, I think there was a lot more talk about the renters' rights before it happened, if that makes sense. I think there was
Yeah.
a lot of worry about it. There was a lot coming out in the market, and it was a very doom and gloom. Since obviously the first phase has gone live, it's not really had much of an impact, if I'm being completely honest. Again, the way the
Definitely
market,
perception makes a big thing, doesn't it, rather than actual fact.
100%, 100%, yeah, exactly that. And I think it's difficult as well because obviously there's been a lot of going on in the market in general as well. So it's quite difficult to sort of uh, identify exactly, whether the rent rights would have had an, if the stuff that happened abroad, etc., hadn't been happening, would we have seen an unusual dip? Perhaps. But from what we can see our end, it's still a strong market. Don't get me wrong, there is some kind of movement, I guess, in the buy-to-let landscape. I think we're going to see more of those smaller landlords, those accidental landlords that are selling, they are sort of coming out of the market. But we're also seeing those larger portfolio clients, they're often the ones that are sort of buying that stock up. They're looking to add to
Yeah.
their portfolio. So I think it's still a good market. It's just perhaps a slightly different market to what it was before.
No, definitely. I think that's really good as well to look at it in a positive way. Because, like you say, some people have seen it negatively, but ultimately, all it is just helping those who are professional and be there for their customers. And that's all it is, really, in a nutshell. I know there's a lot more to it, but it's just not letting it affect you if that's the type of business you do. Some of our advisors, it's nearly 20% of our whole lending. So it's
Wow.
definitely still active.
Absolutely, and I think you've sort of hit the nail on the head there. Really, like if you're a landlord, doing the right things already, then it's probably not going to affect you too much at all. But perhaps, if you haven't been, should we say, then perhaps it will have a bit more of a bearing on your business moving forward.
Well, thank you for sharing all of those things and getting to know a bit more about behind the scenes in Kensington. I've got a couple of like quick fire round questions before we start to close off. Are you ready for what I'm going to send your way?
Oh yeah, hit me.
Yeah. What is one criteria area you think Kensington do really well that brokers may not realise?
Yeah, again, good question. So I've talked a lot about buy-to-let, so I'm actually going to mention one of our resi points. And believe it or not, I think sometimes this gets a bit of a negative stigma as well. But interest only and part and part, we've got some really good policy in that space. And I think especially at the moment where it is a rate sensitive environment, things are going up and down, etc. I think there's a real opportunity to have that conversation around interest only and part for, of course, the right clients. The way we do it is that we have an option in essence so that everyone can access an element of interest only. We've got the high earner one, of course, where if they earn at least 75 grand a year, they can go up to 75% LTV on interest only, and then they can part and part to 90 or even 95% on a purchase. So there's some flexibility there. And then we also have an option where they don't have a minimum income. They could be earning 30, 40 grand a year. They can still go up to 50% LTV on that interest only. And again, they can part and part to 90, 95%. So, like I say, in the climate that we're in, if someone's looking to try and fit their budget for a period of time, perhaps there is an opportunity to open up that conversation, say, look, what you could do is part and part, bring that payment down a little bit for the next couple of years, and then relook at it in a couple of years' time. So, like I say, it's a really nice bit of policy. I just think it's one that it gets a negative stigma a lot, but I think it's talked about in the right way. It can be a real asset.
Well, that's it. It's like if, nobody should have to be told no. There's options available for people. And I think that's where they come in and they're needed. It's good to be able to have in your back pocket, isn't it, to be able to offer it. But other than the credit policy, what other reasons should a broker be looking to Kensington then?
Yeah, I mean, of course, like I say, we've obviously got the policy areas that most brokers will know about already. But for me, it is that service, and it's not just that the speed. Like I said, the average act to offer, assessing docs in one day, etc. It's more when I say service, more like the overall service proposition that we have here. And it was one of the things that for me, since I joined Kensington, coming from a mainstream lender, it sort of blew me away really. Not only do we have our field BDM, we've got the national accounts team, we've got the field BDMs team, we've got the phone BDM team, we've then got direct access into underwriters, so brokers can speak directly to the actual mandate holder. We've even just introduced this thing where it's called Kensington calling. So when the underwriter calls out, so proactively calls out to the broker about their case, it actually comes up Kensington calling, so the broker knows who it is.
Oh, that's good.
It's great. Apparently, are you Apple or are you Android?
I'm Apple.
You're Apple, yeah, it's me too. So apparently, it just comes up Kensington calling. But if you've got an Android, it actually comes up with our logo as well, which I thought was pretty cool.
Oh, wow. That is
Um,
smart, isn't
yeah,
it?
it's really good.
Technology nowadays.
It's so simple but so good. We found out that if a broker answers that initial call from an underwriter, they've picked up the documents, the broker sent in the packaging, they're doing their initial assessment, they'll pick up the phone. If the broker picks up that first phone call, on average, we offer the case 25% quicker.
Oh,
So
wow.
it's just a win-win. So yeah, again, it's just something that we're trying to do just to make it that little bit easier for the broker.
Knowing the number makes a massive difference. Like, obviously, I don't know about you. I get so many random calls in the day. It's like just knowing where the number's coming from. You're going to pick it up straight away, aren't you? Then you're not delaying trying to get the voice message, picking it up. Are they free? Like, I think that's a really great service to have.
100%, yeah. I think I sound like I'm similar to you by the sounds of it. I mean, I think it used to be like an 0330 number. Now, if I got a call from an 0330 number, I'm screening it. So, yeah, I didn't judge any brokers for doing it. But, yeah, hopefully now, like I say, the fact that you know exactly who it is. And it's not always bad news when an underwriter calls. Sometimes they just want to ask a couple of questions so they can move the case to offer.
No, and being able to chat makes a big difference, doesn't it? But not so quick of the fire round questions, but really, really great information to know with those things. And especially for people who maybe haven't got to know those more USPs that there is available with Kensington. But where can everybody find help then if they need it when they're placing a case?
Yeah, so just going to the Kensington website, there's lots of different ways, really. There's the live talk function on there. There's the contact numbers for the main head office, and there's also an area where you can put your postcode in and find out who your local BDM is as well. So if you do want to book a meeting or something, you can find out their direct details on there. So again, lots of different ways to find.
Lovely. Thank you very much then. So that's all we've got time for today then, James. But thank you so much for joining us on the podcast. It's been a pleasure to have you on.
Thanks for having me. It was fun.
Yeah, and then as always as well, thank you to everybody listening. We really value your feedback and the conversations that come off the back of these episodes. So please do keep sharing your thoughts and topics on what you'd like us to cover. But that's all for today's episode on Lending Insights. So I'm Victoria Clark, joined by James Burwood with Kensington Mortgages. Thank you for listening, and we'll catch up again soon. Bye.